Responsibilities and liabilities within a tax group for corporate tax obligations, an in-depth exploration. The role and responsibilities of the parent company. Within the structure of a tax group, the parent company plays a central and indispensable role, serving as the primary representative for the group regarding all corporate tax obligations. As the designated leader and spokesperson for the tax group, the parent company is tasked with managing and fulfilling all compliance requirements imposed upon the group by the Federal Tax Authority, FTA. This responsibility entails a range of critical activities aimed at ensuring that the tax group adheres to the applicable tax laws and regulations. Key duties of the parent company. The parent company's specific duties and responsibilities include, but are not limited to, the following. 1. Preparation and submission of tax returns. The parent company is responsible for compiling, preparing, and submitting accurate tax returns on behalf of the entire tax group. This process involves gathering and consolidating relevant financial data from all group members to ensure that tax returns reflect the group's overall tax position. 2. Calculation of corporate tax payable. As part of its compliance obligations, the parent company must calculate the corporate tax payable by the tax group for each applicable tax period. This includes determining the correct taxable income, accounting for any allowable deductions, and ensuring that the tax payable is calculated in accordance with the relevant tax regulations. 3. Filing and reporting obligations. The parent company must adhere to all filing deadlines established by the FTA, ensuring that tax returns and other required documents are submitted promptly and accurately. Additionally, it must maintain open lines of communication with the FTA, responding to any inquiries, audits, or compliance-related matters as they arise. 4. Payment of corporate tax. The parent company bears responsibility for ensuring that the tax group's corporate tax liabilities are paid in full and on time. This includes coordinating payments, monitoring due dates, and ensuring that sufficient funds are available to meet the group's tax obligations. By centralizing these responsibilities with the parent company, the tax group benefits from a streamlined approach to tax compliance. The parent company's leadership role helps reduce administrative complexity and provides a single point of accountability for interactions with the FTA. Joint and several liability of tax group members. While the parent company serves as the primary point of contact and representative for the tax group, it is important to understand that the responsibility for corporate tax obligations is shared among all members of the group. Specifically, the parent company and each subsidiary that is part of the tax group are jointly and severally liable for any corporate tax payable by the group during each tax period in which they are members. This concept of joint and several liability has significant implications for the members of the tax group, as detailed below. Implications of joint and several liability. 1. Collective accountability. Joint and several liability means that every member of the tax group, including the parent company and all subsidiaries, is collectively responsible for the full amount of any corporate tax owed by the group. This ensures that, should one member fail to meet its obligations or be unable to contribute to the payment of taxes, the remaining members can be held liable for the outstanding amount. This approach provides the FTA with strong assurance that the tax group's tax liabilities will be met, as any member can be called upon to satisfy the full obligation. 2. Individual liability for group tax obligations. In practical terms, joint and several liability places the burden of potential tax debts on every member of the tax group. If the tax group fails to pay the corporate tax due, the FTA may pursue any one or more members to recover the entire debt. This aspect of liability underscores the importance of effective collaboration and mutual accountability among tax group members, as each entity has a vested interest in ensuring that the group's tax obligations are met. 3. Risk mitigation and compliance management. The shared nature of liability encourages all members of the tax group to actively participate in compliance management. By ensuring that all group members are aware of their responsibilities and are compliant with tax laws, the tax group can mitigate risks associated with joint and several liability, such as potential penalties or enforcement actions by the FTA. Limiting liability within the tax group. Recognizing that the blanket application of joint and several liability may not always be appropriate or desirable, the regulatory framework allows for the possibility of limiting liability to one or more specific members of the tax group under certain conditions. This flexibility is subject to the approval of the FTA and may provide a tailored approach to managing tax obligations within the group. The key aspects of limiting liability within a tax group are as follows. Applying for limited liability. 1. Submission of an application. The parent company and the relevant members of the tax group may jointly submit an application to the FTA requesting that liability be limited to one or more designated members. The application must provide a rationale for the proposed limitation, demonstrating that such an arrangement is appropriate and does not compromise the tax group's compliance obligations. 2. Approval by the FTA. The decision to grant limited liability rests with the FTA, which will evaluate the merits of the application and consider factors such as the operational roles of the members, financial risk distribution, and the overall structure of the tax group. If approved, the specified members will bear limited liability for the tax group's corporate tax obligations, while the remaining members may be relieved of joint and several liability. 3. Tailored risk management. By allowing for limited liability arrangements, the regulatory framework provides tax groups with flexibility to allocate responsibility in a manner that reflects the unique circumstances and risk profiles of each member. This can be particularly beneficial in complex organizational structures, where certain members may have a greater or lesser degree of involvement in the group's operations. For more details, contact us.